Hello and welcome back to another video, and today we're going to be looking at the best strategy for investing in Bitcoin and the cryptocurrency space, the most simple and cost-effective strategy for you to start getting involved with digital assets. And as always, before we jump into today's topic, please make sure you drop a like on the video below. I would be extremely grateful. It is super helpful for the algorithm. Make sure you're subscribed if you're not already, and hit the bell notification icon to stay up to date with everything here in the crypto space. We are dropping new videos every single week, so make sure that you get notified to stay up to date and hit your crypto goals. So without further ado, let's jump into the topic of today's video, which is all about dollar cost averaging. So dollar cost averaging, what is it? Basically, it's an approach to purchasing an investment in which the buyer spreads out their purchases so that the total price paid is less affected by market timing. So if you've been involved in the crypto and Bitcoin space for a minute, you will know that large price fluctuations are not a stranger in this space. And dollar cost averaging is really the most simple and cost-effective strategy for getting started allocating some capital into digital assets and into Bitcoin. And we're going to look at some examples in a few minutes. As always, this is not financial advice, but if you are a beginner and if you are looking to dip your toes into the Bitcoin and cryptocurrency waters, dollar cost averaging is probably the best route to go in terms of hedging against the volatile nature and the market fluctuations that we often see in this space. So what does that look like when we visualize it? Basically, a DCA or dollar cost averaging strategy, it allows us to continuously purchase Bitcoin or any particular asset over a medium to long period of time, where we allocate a certain amount of capital, whether it's every week or every month or every other month, for example, to purchasing that asset so that our cost basis gets averaged out over time. So what we're seeing here in this example is somebody who purchases Bitcoin, let's say at $40,000 in April, they might also purchase some at $40,000 in May, but then they purchase some at just over $30,000 in June, and then they purchase some at $20K in July and $20K in August as well. What that means is the average purchase price that they're getting Bitcoin at is about, let's say, just over $30,000 if we average this out. Whereas the person who makes their investment at a point in time where Bitcoin is at its height, for example, if they put all of their money into Bitcoin when it's at 40K, their average cost basis is going to be 40K. So dollar cost averaging as a strategy allows us to effectively lower our cost basis if we do it over a long enough period of time, and have an average price entry for an asset like Bitcoin that gives us a stronger or better chance of achieving an ROI over the medium to long term. So, this is the Bitcoin chart mapped out for the past about 12 years or so. It's not all the way back to the beginning. But the idea here is, we've seen this is a logarithmic chart as well. So these price peaks and troughs are much more exaggerated if we looked at it without the logarithmic chart. But basically, we've got peaks and troughs everywhere here. So we've got a low, a market low, a market high, another market high here before going lower, before going higher again, dropping off into this low zone here before really taking off and going up to, about 20K or so, and then purchasing here around, let's say, $4,000 versus purchasing here at $69,000 is a big difference. So the whole idea here, again, is that we don't want to be, well, obviously it would be a perfect scenario to be purchasing the bottom every single time and riding up those massive gains and then selling at the perfect top. But the ability to perfectly predict cycle tops and bottoms is extremely difficult. So the thesis with dollar cost averaging is that we can average that out over time and make purchases every week, every month, so that we're getting these averages all the way down, but we're also getting the average prices all the way up as we're scaling. And in the long run, that gives us still a positive ROI given the returns of Bitcoin over the past 15 years. But we are avoiding scenarios where we simply make huge purchases at market tops and then lose a lot of money on the way down by not purchasing anything. So how would that have performed over time? Well, we're going to look at this tool that gives us a bit of a snapshot with dollar cost averaging and how that would have performed over the past few years. So this tool is at dcabtc.com. You can check it out yourself. But basically what we have here is a chart visualizing a dollar cost averaging scenario over the past 6 years. So what we've done here is we've allocated $100 every month, so only $100 per month, and accumulating that for the past 6 years. That would give us an ROI of 91%, which is pretty good for a total amount invested. So investing $100 per month every month for the past 6 years would have been a total of $7,200 invested for an ROI of a total of $13,752. So as we said, a 91% ROI. If we look at a couple older examples so we can do the process over 7 years, we can see that obviously as we go back in time, Bitcoin has made even better gains in some of those earlier years, but we can see that over 7 years, doing the same purchase amount each month over the course of 7 years for a total investment of $8,400 would yield us $25,000 in total, which is a 200% ROI. And then one more example, if we go all the way back to 9 years, we can see that putting in $100 per month every single month over the course of 9 years would mean investing a total amount of $10,800, but a return of $174,000, giving us over 1,500% returns over the course of 9 years. So if we look at some of the more recent examples, it'll actually show us even negative results with the past 2 years. So slightly down 4% if we just did this for the past 2 years. Of course, we have been in a bear market for the past 1.5 to 2 years, and we are just entering kind of the bullish phase of the next cycle with the upcoming halving approaching. So, you have to think about the context of that as well. But it's quite clear that a steady and consistent DCA strategy gives us a very good ROI over the long run. And 1,500% over 10 years, over 9 years, is a pretty good result. So I think the main point that we wanted to make here today was just about getting started with dollar cost averaging and thinking about your investment strategy when it comes to Bitcoin and other digital assets. You can put this on autopilot with a lot of the solutions that are on the market right now as well. For example, what we're looking at here is the Jupiter Decentralized Exchange, and this is a DEX on the Solana network, but they have a tool for dollar cost averaging where you can set it and forget it, basically. So what this allows us to do would be to say, obviously you need to fund your wallet with US dollars first, but what you would then do is you would say, okay, I want to allocate $100 to buy Solana or whichever other asset that you choose. So you could do Ethereum or whatever asset that you want to pick. And you can allocate $100 every week or every minute or every hour, every day, every month. So again, we could do every month, and you can do that over the course of however many orders you want. So if you wanted to do it, let's say $100 every single week over the course of a year, you would set it to 1 week. Every 1 week, over the course of 52 orders would allow you to execute purchasing $100 worth of Ethereum every single week for the next year. And that would happen automatically. You set it and forget it, and it does the work in the background on the exchange for you once you set it up this first time. So dollar cost averaging really is the most simple and easiest way to begin dipping your toes into the Bitcoin and digital asset space. Again, this is not financial advice, but if you are thinking about getting involved and what is the best way to just start building up a bit of a portfolio, and you don't want to be constantly monitoring the price charts, you don't want to be trying to predict tops and bottoms, dollar cost averaging really is the most effective way from an efficiency standpoint, from not wanting to waste your time, and just if you truly believe in the underlying technology of Bitcoin and many of these assets, then if you want to build up your portfolio over the course of the next number of years, then dollar cost averaging is the simplest way to do it. So as always, if you enjoy these videos, please make sure to drop a thumbs up below. Make sure you're subscribed to the channel. We'll be dropping multiple videos every single week. Hit the bell notification icon so you can get updated when those videos drop, and we will catch you in the next one.